Welcome back to 7 Minute Options on Wednesday, October 6th. Today I'm going to be trimming my position in SOFI. I want to get some of my buying power back. Right now my portfolio buying power is right around like $1,500. I'd like to see it a bit higher. And SOFI just hasn't been doing it for me lately. It's just been really hovering for a very long time. If I look at the graph of SOFI here, right? It's just been kind of bouncing up and down and going sideways ever since July. And I got a lot of positions in SOFI. They're mainly bullish positions, but one of the first ones that I can trim here, back in the day, I sold the 17.5 put and I bought the 12.5 put to turn that into a put credit spread. And at the time, I think I got quite a bit of money for it, and I've rolled it now for 2 or 3 times. So what happens here in Tastyworks is after you roll a position a few times, the actual cost number is no longer accurate. But I think right now I have more or less broken even on it. Today, SOFI being 16.55, I think I can just close this out. So if I want to close out the position, I got to pay to close it out. Remember, this pay is already in my P&L year to date, so it's just closing the position out. So that doesn't have an impact on my P&L, but the buying power will go up, right? Because that's buying power I'm freeing up. They don't have to reserve the $750 anymore to cover the $500 to cover the entire $5 wide credit spread there. So I'm just gonna do it. I'm gonna get rid of it. And again, I don't really have a problem with the position. I've been pretty lucky. I've been able to roll that position out quite well recently. Because SOFI was at 16.55 is fairly close to the 17.50 short put, and so there's still enough extrinsic value in that position to be able to roll it out. So I've been rolling it out, but again, it eats up buying power. So now I got some buying power back. I'm up to almost 2,000. And the other one here is this is a very bullish position, right? I sold the 20 put to finance the 22.5 call. What I can do here is actually, I don't mind the put. It's a naked put. I can roll it out. And it's not the end of the world. And the other thing is, if I was to close this out, so let's say I close out this position, I would have to spend $415. I would get back $657 of buying power. Not bad, actually. Not bad to get rid of it. Another option I have is, rather than close this out, is to maybe turn that into a strangle. Because actually, I don't expect SOFI to go back up to 20 anytime soon. For some reason, unless SOFI has knockout earnings coming up at some point in the near future, maybe. But this stock just didn't take off the way I was hoping it would. So if I take this position in SOFI, and you can see November 19th, there's the 20 put that I sold. There's the 22.5 call that I bought. I can just sell a put, right, and turn this into I can sell a naked call and turn this into a call credit spread, right? So I would get 65 credit for it. My buying power goes down by 185. I could also close this out, right? If I close it out, that is just buy the put back and not have to deal with the put. I would only pay $340. I would get $482 back in buying power. So what does this do is this takes the naked put and turns it into a call credit spread, because I still have the naked bull call, right? But now by selling a short call at a lower strike, I essentially turn that into a credit call spread, which is not bad. I'm taking $250 of risk on the upside if SOFI were to take off. That's another option I have. But let's look at the other ones I have here. So this butterfly I'm going to keep on. That's 471 days away, so I'm hoping for if this thing starts taking off and we start getting into $25 or $30 ranges for this underlying here in the next year or so, then I'm going to do very well on that one. Another position that I have on here is this $15 put, which I sold at 471 days to expiration. The idea was that if this thing starts taking off, I can get to 25 or 50% pretty quickly. So far, I've done okay, right? I'm $121 ahead on this position, and maybe now is a good time to close it. I have a GTC order to buy it back for $269, but right now to get some buying power back, I'm okay to close that today. So I'm going to cancel this GTC order. Look at this put. I'm going to close it out, and there it is. Yeah, I paid 405, but I get 500 bucks back in buying power, which is pretty good. So I'll take it. And that one filled right away, so that's fine. And so, yeah, now we're at $2,400 buying power, and our exposure to SOFI is not as much as it was before. So that's pretty good. So what I have now is I got this $20 naked put, and I got this 22.5 debit call. And again, this I was expecting this to kind of take off. This $20 put, again, it's not a spread, it's just a naked put. So actually, I can keep rolling this out. So even though this expires in 44 days, what I'll do most likely is I will just roll it out. I can roll it out today, but I like to wait until I'm about 20 days away before I roll it out. This 22.5 call, I really don't expect in the next 44 days for this thing, for SOFI to get anywhere near 22.5. So I'm just going to sell it today. I can still get 35, 36 bucks for it, so I'm just going to do it. If somebody wants to pay me money for it, great. And there he goes. It feels, wow, these SOFI positions are just filling in awfully quick. I usually have to wait a few minutes, maybe even roll it a few times. But so there you go. That really just is 36 bucks I got back. So that doesn't affect my buying power at all, except maybe add 36 bucks to it. So that's it. So now I just have the one put. I have this butterfly that expires in a year and a half. And this $20 put, I'm going to be rolling it out every month. When I get down to 20 or 25 days away, I'm going to roll it out. And maybe even if I can still pick up a credit, maybe I'd even roll it down. Like roll it down to a 19 put or an 18 put. If I can still pick up a credit, I'll probably do it. And I'll see. I'll start chasing this SOFI position. At one point in the future, the goal is that SOFI will be higher than my put, in which case I can turn it into a strangle, or I can continue to roll it out. Ideally, I like to stay close to the price. The problem is I don't want to do that today. So ideally, what I would be doing is closing out the 20, right, and moving it down to, let's say, 17.5, which is as close as I can get to the 16.5 stock price. So right now I would spend $187 on it. And the only reason you would end up doing that is because the theta is higher, right? So the closer you are to the actual underlying price, the higher the theta of that particular option. So the option here you can see has a theta of 1.8. The option I have right now, which is farther away, is 1.5, maybe 1.6. So you would get a higher theta. But at the same time, I would have to pay 200 bucks to do it, and I don't feel like, not the worst thing that can happen. Another thing I could do is, I was thinking about this. I could go inverted. I'm not a big fan of going inverted, but the idea here is if I were to sell the $15 call, I almost do it at no effect on my buying power. But at this point, I'm going inverted. So yeah, I pick up $250 worth of credit, but right now, there's no profitable zone for me here, right? In between these two strikes, the combination of these two short positions will guarantee a $500 loss, which, if you do it right, can be offset by the credits. Like, yeah, I'm guaranteed to lose 500 bucks, but look, I just got $247 in credit. I can roll it out. Is this something I'm prepared to do? Actually, you know what? Now that I think about it, it's not bad. I mean, I'm doing it at no extra buying power, and I pick up additional theta, right? Another 1.5 theta. You can see that's a theta right there. That's the additional theta that I'm getting. So, if SOFI starts to take off, then yeah, I'm going to have to roll it out and start chasing it. But I just don't know where this is going to go. SOFI is a bit of a mystery to me. And of course, every month you would roll it up and roll it out, and you would start chasing it. And maybe at this point, I'm just after theta, right? I'm just after trying to get as much theta as I can for my money. And yeah, it's not ideal to be inverted, but for a month or two, if you have to be inverted, that's fine. Because at some point, I'm going to roll this up to the 17.5, maybe roll this down to the 17.5, and that becomes a strangle. And then maybe a few months later, roll the put down to 15, roll the call up to 20, and all of a sudden it becomes a regular strangle. Why not? Actually, it's not bad. It's not a bad idea. I could also go out to the 17.5, pick up 126 bucks in credit, and that right now is out of the money by $1. And so it would be easier to roll. Well, yeah. Let's see. Both are highly liquid. Both are like 3 or 4 cents wide here. Is there a right answer? Is there a wrong answer here? This thing is already $1.15 the money. If it starts really taking off on me, it's going to require additional buying power. You know what? If I sell the $20 call, I only pick up 65 in credit, and that becomes a regular strangle. You know what? I like the 17.5. I'm worried about the 15 because if it really takes off on me, I'm going to have a hard time chasing it. Because remember, if it goes up by another $1 or $2, then all of a sudden this thing is $2 or $3 out of the money, or in the money rather. So, all right, decision made. I'm going to go for the 17.5, and that's fine. I actually get a little bit more theta. That's fine. I get a lot less credit, but I'll take it. Right now, there's still $1 out of the money, and if I do get challenged, I can just roll out and up or roll out and down for the put, and I'll be fine. So yeah, why don't I do that? Try to pick up a little bit more credit here on SOFI. That gets filled automatically. Incredible. I don't have to wait for any of these trades today. So there you go. I'm back up to $2,500 in buying power, and maybe, what else can I do for freeing up buying power? I don't want to touch my Palantir or my SOFI positions. These ones are very simple. They're just a covered strangle. I'm happy with them. They're making great theta here, 3 and 3. Pinterest, I'm getting 8 theta, which is fantastic. The problem with Pinterest is right now it's challenging my short put. I got earnings coming up. So this is one of those positions where I really am not neutral. Usually I set up earnings trade so that it's neutral, goes up, a little bit down, doesn't bother me. But just the way that we ended up in this position with Pinterest, I really need this thing to go flat or up on earnings. So yeah, this hole in Pinterest just keeps getting deeper and deeper for me. Although with Pinterest, the RSI is quite low, and it has bounced off this level before. So hopefully with earnings, if the earnings are neutral or positive, it'll bounce back, and I'll recover quite a bit, not just from the stock value because I do own 100 shares, but also from the puts, and of course from the volatility crush that happens right after earnings. So I'm going to keep Pinterest open. I'm going to take that risk and see where that gets me. Yeah, not a whole lot else I can do.